Hello everyone, it's Red with RedDragonLeo.com. I thought I'd do this quick update here for you, just a technical update here for Thursday morning before the market opens. As you can see here on the weekly chart, we are now banging right up on this 20 moving average here at 12.2642, and we've pierced it and come back down and closed right at it so far. Next up, the next level above, that's 12.6619, the 50 period moving average, which very well could be our target before we go down, or it could be just slightly above where we're at right here. You will notice down here that we are almost ready to go positive on the MACD histogram bars. I think that we might get this week positive. It'd be the only possible week. And then next week, obviously, I think we're going to start crashing again. So, but obviously, as for right now, we are pointing up, and I do expect this to, again, probably go positive this week. And then you could literally draw a line right down right here, and we're already almost hitting it. So, time the week is out, we'll probably be right up at it, and ready to roll over for next week. And so, as what we are seeing here in the daily, you can clearly see there's still no signs of it rolling over yet. Yes, it's close, but it's not ready to give up. And you can see we've had 1, 2, 3, 4 days of chopping around at this 12, 20, 12, 30 area of resistance. And the old saying is there are no triple tops. Now, short term, I see them all the time, triple tops, intraday and multiple days, obviously 5 days here in a row that they've banged upon it, or 4 days in a row. 5 if you count this little tail right here when they came close. So, that obviously is well more than 3 attempts. But I think what they mean by that is after several weeks or multiple days, the third attempt, it doesn't happen. It usually pierces through. And basically what we're talking about here is this attempt right here, the first one, and this attempt right here, the second one at this 1220, 1230 area, and this attempt right here, the third one. And so it pierced through it here, this intraday, and then came back. That basically gave the bulls a little taste of blood there, and I think that after 4 days of this, they're not going to give up until they pierce above here and clear out all these stops. There are stops sitting there where traders have put stops here after the market fell, and then traders put stops here after the market fell, and then the bears, they've given them multiple times to get on board right here, and they again put stops up here, probably in the 1235 to maybe as high as 1250, depending upon the person, but somewhere in that range of probably 1230 to 1250, there's a ton of bears that put their stops there. They shorted the market, borrowed stock, and basically they put in a stop loss to say that they'll buy it back if it goes in that range, if it goes against them. Well, if we are going to turn this market over and just absolutely collapse, I promise you these market makers are not going to go down without taking out those stops first. And I do not believe they took them out on this one teeny little pierce. That it's a range. It's not just right above 1230. It's a range, and I believe the range is between 1230 and 1250. So that's why I think we're gonna get up there and clear them. Now, depending upon how many stops are there will depend upon how far we go up in the market. Obviously, when we start triggering some of those stops, they're buy stops, so they'll be forced to buy, and that obviously will cause the market to shoot up. We should easily get to 1250 off of it, and it's possible, depending upon how many stops are there, that we could run on up to 1270. And hit this 200 moving average, which is actually 1275.18 right now, but that could be next week it'd be a little lower, but very well could get up there to that 1270 area if it could be the fake print on the SPY from several weeks back of 127.07. I don't know for sure that that's happening. We've only got 2 days for that to happen, today and tomorrow. So, you know, are we going to do it today? I don't know. It's possible. But it's probably more likely tomorrow that they'll get the squeeze going. But it could start in the afternoon today. Right now, you know, before the market opens here at, it's up 5 points already at 12.12 on the ES. Right now, and it's 8 a.m. So, you know, again, I don't know if they were going to go, if they were going to initially go down first, maybe tag the 1200 level and turn them back up, or just turn them back up. But you know, you can see here that we have a little ways to go here on the full stochastic. You could go all the way down before turning back up, or you could, you know, turn up midways and just hook it right back up. If you know, tried to do that, you could do that. The MACDs are slowly losing steam. As you can see, they're going all the way down here, and they're approaching the 0 level, and they're running out of steam. So if they're going to rally this up, they're going to have to break this trend line and come on up here like this, and then roll over next week. And that, of course, would put in a different negative divergence. But we are close. You know, you could argue that we could just continue on straight down. It doesn't look like that. And, you know, if it wasn't for this Legatus pilgrimage, if it wasn't for the Mayan calendar ending on the 28th, wasn't for the turn date of the 21st here, according to the tropical guy, and you would expect this to be off a little bit and to be closer somewhere between the 26th and the 21st. Obviously, the 21st is just Friday. The 26th is Monday. I'm sorry, Wednesday. Then you got Monday, the day after Legatus. You've got the EU debt vote over the weekend on the 23rd as well. So you got a lot of you know, important things that are happening. And just in case you hadn't seen this, you guys already know about this, but I'll show it again. They've delayed the summit until October 23rd on a Sunday. And, you know, same thing with Legatus on a Sunday. That's when it ends. So, you know, everything points to either this Friday put it in the top, or Monday put it in the top. Yeah, it can stretch out to the new moon on October 26th, which is Wednesday. But I personally, I got the feeling it'll probably be on a Monday, like it was the last time, and then it'll start to sell off, maybe gain some strength on that day. Remember, the new moon highs and the full moon lows are plus or minus 2 to 3 days. So we're not sure on exactly when it'll be, but I don't believe it's today, not without taking out these stops overhead. So again, you know, you could argue that you could go down further. It could be read that way. It very well could. I just don't think it'll happen. The most I could see us going down maybe here is this 1200, or right here at 1204 for the 50 EMA. Well, I say 1200 because it's an even number. We could go down there in the morning if you know, any economic news comes out that's bad in the morning, that could push it down. But right now it's not looking that way. It's up 650 right now. So what, you know, well, obviously what I'm thinking is they're just going to curl this right back up, and they're going to curl this right back up. And so here on the 30-minute chart, you can obviously see that's exactly what they're attempting to do. The full stochastic has already bottomed out. Could chop around sideways there for a while, but I don't think it will. I think it'll turn right back up. And same thing here, we'll turn right back up. Again, we'll turn right back up, and this time we'll bust up above this most likely if we're going to put in a new high. We don't have to. We'd actually put in a new high without busting above it, but it's more likely that we will, because it'll be you know, a last ditch surge, which should again get a lot of buy stops, you know, forced to happen, which obviously will propel it quite a bit further. But you just don't think that they are going to let you. Look how much time the bears had to get short here, and everyone got excited when the move came down right here, and that is perfectly understandable. But I just don't think that it's just going to keep right on going down. You had a chance to get short here, chance here. Here would have maybe been the pros, and here would have been the amateurs, and here would have been the last sheep. Not the last sheep, all getting short at the same time, and they just make it too easy. It's not. It just doesn't happen like that. You can see here, of course, if we went back on this move right here, you would have seen it go down like this and come back up, and there were probably some people getting short right in this area here, and then they just jacked it and stole all that money, took it out from them, and then they went down. And that's a common thing for them to do. Same thing here. You can see they just ran this thing down, and pros got short here, maybe some amateur traders got short here, and the sheep got short here, and they just ran it up and took them out. Obviously, they didn't take it out to this because you have to make either an ABC down or a 1, 2, 3 wave down. That's just the way it works. But it is just going to be common that once we go down, then we'll have a sharp reversal, much like this or much like this, and then you'll have that other wave down very severely. But these sharp reversals can happen all in one day, and that is common. If you look back there, like right here, look at this one right here. You went down for 1, 2, 3. The fourth day, you had a sharp reversal, then down again, then the sixth day you had another sharp reversal, and then you just sold off again. So they wanted to clear out some of those amateurs. That's just the way that they do that. So here's a 15-minute chart pointing up as well. So everything right now tells me that before this is done, by the end of the day, I think they're going to be banging a fourth time on this line overhead, and I think it's going to break this overhead area here. They're going to bust through it, and once they do, you can expect a bunch of buy stops to get hit, and this to easily go to 1250, if not 1270. If they go to 1270 tomorrow, Friday, that's a big if, because I don't know if that's going to happen. If they do that and hit that 127.07's fake print on the SPY, yes, I would go short on a Friday. If they don't, and they just simply go up and put in a solid positive bar, all up day like this, then I'll wait till Monday to go short. And you just have to see, because typically, even if they put a solid bar up like that, you don't gap down the next day. When you put a completely solid white bar up, a very powerful white bar up, momentum alone will force you, even if you gap down the very next day, the very next trading day, momentum alone would tell you that it's going to go right back up and close that gap to give you the opportunity to go short. So you have to look at the candle pattern. Obviously, if we go up very quickly on a Friday, let's just say, for example, we went up to, say, 1250 by today, and then tomorrow, Friday, would go up, and early in the morning we hit that 1270 area. If that was to happen early in the morning, then you'd have the rest of the day for it to sell off, you see, and that would tell me that it would go up there, hit it, because it's going to hit a ton of resistance in that area. Actually, starting as low as 1260 to 1270 areas, or 1275 for that 200 moving average. There's a lot of resistance there, so you would expect it to hit it and turn tail back down and fall the rest of the day and put in a nice topping tail. If it does it like that, and does that on a Friday morning, then you've got the rest of the evening for it to fall back down. You would want to get short at that point, because then that would lead to the possibility of a gap down on Monday morning after the EU summit, puts out bad news, or whatever event, I don't want it to be, but whatever news they want to spin to cause the crash. I don't know, but That's what you would look for. Now, obviously, the flip opposite is true, is that if they ran it up into the close Friday, they jacked it up to that 1270 area and closed it again at the high, then you'd want to wait till Monday to get short on Monday morning, because it's very rare, again, that they gap it down after closing at a solid red or solid white bar. You can look here, you can see it here, solid up, opened, it went down a little bit, and it chopped sideways and went up again. Then same thing here. They opened there and then they went down, so they give you the opportunity to get short. Same thing here, solid white up, and you had 2 days of opportunities to get short. Same thing here, you went up and it opened flat and then just sold off. So you're going to have the opportunity to get short. So I would not worry about it unless it's a topping tail. And here's your perfect example of the topping tail. Only it's not a perfect one, because it's not right after the white bar right here, the solid bar. It opened there, it went down. Then here it opened, ran up, took out anybody that went short here over those 2 days, then came back down, and then the next day, as you can see, it gapped down and just absolutely collapsed. So if you see this on a Friday, the only way, again, I would see this is if, again, we ran up to, say, 1250 or something a day, and then Friday we ran up in early in the morning to hit that 1270 area, and then started to sell off the rest of the evening. I would get short there for sure at that fake print area, that 127.07 on the spot. I don't know if we're going to hit it or not. I don't have a clue. I only believe wholeheartedly that they will take out these overhead stops in this 1230 to 1250 area before they collapse this market. So, I'll either be looking to get short on Friday, or I'll be looking to get short on Monday, depending upon how the day goes. As for today, so far, it hasn't started yet, but I fully believe that we are going to continue rallying up. You can, if I pull down the EU right here, the chart, the ES, you can see here that down here, you can see that this is on a 2-hour chart. See, the 2-hour chart is pointing down, and it could continue down or curl back up. So it's kind of conflicting with the 60-minute chart. So when you get these conflicts here, let's do the 4-hour chart, and we'll see the 4-hour chart. You see the 4-hour chart is also losing steam. It could continue down or go up, either one. Don't really know. But when it gets down here to this zero level, it's hard to predict it, because it could continue down or go up. Yes, it's curling back up, but look at the bars below. Very, 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 very shallow. Shallow here on the top and shallow on the bottom. In order for you to see like a rally, you want to see them deep, so that it's going to turn and come back up. Like -5 right here. And you can see it numerous times that it's produced rallies on the 4-hour chart when you see a negative, down there in negative area, heavily deep. Of course, you have to mix this with other charts as well, because here, if you'd have got short here, or if you'd have got long here, you'd better be looking at the daily chart too, because yes, it's oversold, but look at it in this area. You would have made it up to here if you'd have got there, but after that it would have collapsed on you. So obviously you would look at this is 1, 2, 3 lower bars, which again would be wave 1 down, 2, 3, 4, 5 is what you would have seen with that. So you have to mix all this together. Right now it's not giving me any clear direction on the 4-hour chart or on the 2-hour chart, so I just have to go with it just as basically a gut instinct and a little bit of common sense that tells me that they're going to take out those stops before they crash the market. And that just makes sense to me that they would do that. Yesterday I did a little 5-minute short video, and I pointed at this trend line right here. This trend line is from the May 2nd high. You can see that May 2nd, 11:30 a.m. is when I actually connected that chart. Look how many times we've hit this line. This is the 1 minute chart, 2 days 1 minute chart. Do you really think that they are not going to pierce this thing and clear out those stops? I'm going to tell you that they are. Look here at the 60-day chart, and you can see, let's see, here's your 1, 2, multiple hits here. Here was 2 in 1 day. You just count that as 1. Count that as 1, and you count this whole area as 1. Triple tops, but it's hitting it more and more times. Here it hit it twice, couldn't get through it. Here it's hit it 1, 2, 3 times. This, next time I do believe it's going to go past it. On the 1 year chart, looking at it on the 1 year chart, this one here does not have the one from 1994 on it, but if I type in SPX, I actually put it on there. This line right here goes all the way back to 12/1/1994, and obviously it's a very important trend line, and you can see it hits just under 1250. I think that's the target. Same thing here. Here's your 5/2 line, your May the 2nd, and again, that was the peak. That was like the Goddess pilgrimage was April 30th to May the 2nd. That was the one earlier this year, and now we're getting ready to have the end of the one the 23rd. So this should tell you something. 1994. I'll go back to 20 years. I guess 20 years will cover it, will it? 1994 down here. You can see there's where I connected it, and it connected it to here, and drove it on up to here. So you can see this is a major back test. Boom. And notice where the market stopped at right here, the first stop, and where it closed at that particular day. You hover over that trend line is 1996, July the 1st, and it basically connected to an important closing low here to a closing low here. That's what I did. Closing low to closing low. You could also draw another one from intraday low to intraday low if you wanted to do that, to give you an idea, because obviously that is an important one as well. Intraday low, and we'll draw that so we have an idea about where that is. And as you can clearly see, closing low puts you at about 1060 there, and intraday low puts you at about 1000. So these are important, some trend lines when it comes to the ending one of these big moves down. So let's keep them in mind. Okay, guys, that's it. This is all just obviously just a technical video for today. I just wanted to kind of let you know what I was seeing for today. I am expecting possible early morning selling, but it doesn't look like it right now. We're up 7 points. It's more likely we're just going to continue rallying, and we're going to take out those overhead stops. So just be ready to go short either this Friday or Monday. Good luck, everyone, and I will see you in the chat room at stockmarketbloggers.com or on the blog. I have had some problems with Discuss. It's not just me. Anna was having it over at Hot Option Babes. I'm sure other people were having it too. So do apologize for that, but that's nothing I can do about it. So okay, that's it. Time for me to go get my coffee and upload this video for you. See you guys.